Hello, I'm Richard Murphy, and I want to talk in this, which is the first of a short series of videos about accounts and why I think they are important. Now, it's unsurprising that I think they're important. I'm a chartered accountant and have been since 1982, so I have a certain bias about this, but in practice I think that accounts really are deeply significant in the way in which we understand the world that we live in. Now, I know that not everybody understands accounting, and actually what I would like is that more people do, and that accounts that are produced are more comprehensible. And in fact, that is precisely the point I want to talk about. The difficulty with most of the accounts that are produced by most companies is that, frankly, very few people understand them. And that's not by accident. It's actually by design. And let me explain why that is. If we actually look at the purpose that it is stated accounts are produced for, then according to international regulators, that's the International Accounting Standards Board, and UK regulators, that's the Financial Reporting Council, who are responsible for UK accounting standards, then the primary users of accounts are the shareholders of a company. And the primary purpose that they have for the accounting information that they are provided with is to decide whether or not they are going to continue to engage with that company in which they own shares. Now, there are a lot of things wrong with those statements. First of all, the majority of accounts produced in the UK are not for companies. There are many more self-employed people than there are limited companies preparing accounts in the UK. Therefore, it's wrong to assume that all accounts are for the benefits of shareholders, because they're not. They're for the benefit of owners, and they have a different interest. Second, most people who are engaged with companies are not thinking of buying or selling the company. And certainly if they are, they're not thinking of doing so on a stock exchange, which again is the bias implicit in the assumption that is made by the accounting regulators. In fact, less than 1% of companies have shares traded on a stock exchange, and of those, most will have shareholders who hold their shares for the long term, not for the short term, and therefore this one stated purpose for accounting is wrong. It's simply not what people need information for. And so, unsurprisingly, the accounts that people get from their accountants, prepared in accordance with the rules and therefore correct in that very limited sense of the word correct, are not very helpful to them. And that's the problem with accounting that we have today. There aren't one group of people who are interested in accounts. I reckon there are at least 7. Apart from the shareholders, there are the other providers of capital to the company. That includes banks and maybe insurance companies and credit card suppliers and PayPal or whoever else might be that you borrow money from, because you can borrow money from PayPal. Then there are the trading partners, the people who the company sells to and buys from, who want to know, are they going to be paid? And yes, the customers do know that too, because they've got guarantees and other things which they are also interested in. Of course, there are the employees. They want to know, will I be paid? Will my pension be paid? Will my bonus be paid? And so on. But also information about relative pay. Who else is there? Well, regulators. Regulators need to be able to identify who they might have concern about. So accounts clearly help them to do that. And there are tax authorities. We all know that most accounts are prepared actually to satisfy the obligation that a company or an individual has to declare their tax liabilities on their tax return, and that's the primary use of accounts really, whatever the accounting profession might say. And finally, there's civil society. That's you and me if we don't own shares in the company, but are worried about its impact upon our well-being because of pollution, because of any other activity that it undertakes which we think might impact upon us in a way that we don't like. For example, it wants to take over the ownership of a property, knock it down, redevelop it, or whatever else. Who knows? But we have an interest in it. We're civil society. All those other interests, apart from the shareholders who are buying and selling shares, are ignored effectively in the production of accounts. Unsurprisingly, accounts aren't really fit for purpose as a result. And that's my big worry about the fact that at the present point in time, the government is undertaking a review of the future of audit, and I'm going to talk about audit in the next video, and is not once asking, have we got the accounts right? How can you discuss the future of audit when you don't even make sure that the accounts that are being produced for audit are fit for purpose? My suggestion to you is that most accounts produced by most companies in the UK now, over 99% of all accounts, are not fit for purpose because they don't answer the questions that most people might reasonably have, including what are the number of days of credit taken off their suppliers? What, on average, and in each subsidiary company? What's the pay gap by gender? Because that's not in the accounts, that's outside it. What's the race pay gap? What's the ethnic minority pay gap, in other words? Why isn't that figure disclosed? Why aren't we disclosing the pay of all staff in bands, say of 10,000? How many people are paid less than 10,000 a year? How many people are paid between 10 and 20,000 a year, and between 20 and 30,000 a year? When I began my audit career, that was required. Now it isn't. Why don't we know that? Why can't we see the biases which are implicit within the structure? And with regard to tax, well, how much tax is actually paid in a year? Because amazingly, in the vast majority of companies, there is no cash flow statement. So we don't know how much tax is actually paid. We only know how much is provided for in the accounts. And we can't therefore show whether in fact the entries with regard to tax even add up, because there's no figure for tax paid. Massive amounts of useful data are missing. We have to rethink our accounts to make them talk to us in the way that is really meaningful in the 21st century. Accountancy is due for a revolution, and oh boy, do I wish it would happen now. Thanks for watching. If you're interested in what I've been saying in this video, please subscribe. There is a button below the viewing screen. If you're interested in what I have to say on Twitter, I'm at Richard J. Murphy on that medium. If you want to look at my blog, that's taxresearch.org.uk, and we have a Facebook page as well, Richard J. Murphy. So one of those things will get you more information on what this video series is about, and I hope I'll see you again soon.